Boris Schlossberg of BK Asset Management and a CNBC contributor joins us. Let's start with Boeing today, Boris.
So Boeing was a stock that you couldn't give away for free just, a little while back. And now I think, frankly, is probably the single best favorite stock of the three that we're discussing today, in my opinion. It's got, I think, the strongest secular story here, simply because it's come back in a big way after the 737 disaster. There's a tremendous a book of orders that it has in front of it. In fact, its biggest problem now is deliverability, and that's what investors are looking for every single month, at how many planes they're starting to deliver as they really ramp up production. They're still behind Airbus because of China, but I think that's a political much more than an economic issue. Overall, the rest of the world, I think, really wants their products. When the Dreamliner comes on, it's only going to add to free cash flow. I think very strongly this is a $200, $250 stock 2 or 3 years from now, as demand for travel and just the secular growth, the need for very, very efficient airplanes is going to be with us for a while.
Speaking of demand for travel, what about Disney?
So this I'm a little bit more wary of, not because it's not a great company, but because I think most of the good news has kind of already been factored into the stock. The return back from post-COVID to the parks has already kind of happened, and the further growth, I think, is going to be much slower than it was before. The Disney streaming has kind of penetrated as much of the market as you can possibly imagine. Now they're going to go to the video and the advertising model, and that's going to take a little while to scale. And then there's also the open question of ESPN, which is really losing a lot of its luster because it's so expensive to do live sports broadcasting. As a matter of fact, live sports broadcasting has now become a domain of Apple and Google and Amazon. All the cash flow tech companies are going to be willing to pay money for it. So if they spin ESPN off, that's actually going to be, I think, a big positive for the company because it won't be as much of a profit drain. Overall, I love Boeing, I think, as a perfect covered call stock. It's something you want to own for the long run, but I think it's going to be range bound for quite a while, and you might as well sell calls against it and collect premium.
And final name on this, Goldman Sachs. What do you make of it?
So also another really storied name, and obviously, the prime name in finance. My biggest issue with Goldman Sachs right now is the Fed. The fact the Fed is really starting to raise rates and kind of is adamant about going to 3-4%, it's really going to stymie their investment banking business, which is a third of their business. It may stymie their trading business if markets slow down a little bit. So to me, and also the stock is obviously at the upper end of its book value, and therefore price to book value. So therefore, to me, Goldman Sachs right now is probably a sell to put kind of a story where you may want to sell the 310s or the 300s. It's a great stock to own at those levels, but I just wouldn't want to be owning it at this level right now.
Well, cheers to you, Boris Schlossberg. Thank you for that.